Welcome back. We now shift to take a look at markets and to do so with an eye toward the partial government shutdown, which may or may not be on an end. It appears so, but who knows? It's a pretty decent beginning, at least to the year, also in markets. We're joined by John Grace of Investors Advantage and Danielle Shea of Simpler Trading. Welcome to you both. Danielle, let's start with you. Which could be the companies and or the stocks which could really sort of bear better in a government shutdown, whether or not this one actually stops? It would only go till the 15th of February, so we might have another one after that if President Trump doesn't get his vanity border wall project. What do you think? Which might be good investments, Danielle?
So what I'm looking at here in the case of the government shutdown, or really any other instance in the news that's causing volatility, is I want to look at the Phoenix stocks. These are the stocks that have risen from the ashes the quickest and the fastest after the sell-off that we saw in December. And particularly what I'm looking at right now are sectors such as the semiconductor sectors and the cloud stocks as well, because, you know, at the end of the day, they're very fundamentally sound and the technicals got a little bit wrecked, but once the market started climbing higher, so did the stocks.
So which would you point in that? Give us a couple of names for those taking notes, Danielle.
Definitely. So for cloud names, particularly Microsoft and Amazon, those are two of your obvious picks. I also really like Cisco and Oracle as well as Salesforce. So those companies are really very strong, and particularly around earnings season, a lot of the times you're going to see those companies have a nice run up into earnings. And in the instance where you have such positive earnings reports, that can send them skyrocketing even higher. For example, some of the reports that we saw yesterday in some of the semiconductor stocks, such as Xilinx and LRCX. These are really positive reports, and we saw movement in Intel initially, but also in AMD, pushing those stocks higher. And I do think that AMD continues to be a really strong buy in the semiconductor space.
I knew you would come through with names. Thank you, Danielle. Hey, John, a year ago, we were sitting pretty in markets, and things seemed to be sort of a bed of roses, at least for markets. But as the old radio host Paul Harvey used to say, now for the rest of the story. Things certainly changed last year. Some may think that we're in a sort of a similar starting point to 2019, even with all the uncertainties that we speak about on the program. What's an investor to do right now, John?
Well, to recognize, you're right, that last year and this year look remarkably similar so far. And I think we peaked on January 26th and didn't see another peak to take that one out until September 20th. And then, of course, we ended up in negative territory. So if we look at football, which we're all going to be looking at on Super Bowl weekend, right, we all know that the best offense is a strong defense. And what we're submitting is to develop a defense that you want to plan now so that you don't have to panic later. And you want to add more asset classes in addition to stocks and bonds. Look to see what other asset classes you can bring into the equation, and then look back to see how those other asset classes may have helped you keep your assets intact, like in 2002 and then 08 and 09.
Hey, Danielle, it sounded like a pretty solid strategy to me that John laid out. Do you agree with that?
Yes, I definitely do agree with it. And, having a balanced portfolio is really critical. What I like to do, especially as an options trader, is I do like to focus on some of the stronger sectors as well to really kind of compound those gains. But, going back to your previous question of what do we do during the government shutdown is the one thing that I would warn people about is the stocks that get hit by the government shutdown are typically stocks within the travel industry, consumer discretionary, so anything like hotels, airlines, because, when people aren't getting paid, what's the first thing that they cut out? Extra things that they're wanting to buy. So while we are looking at some positives, we also have to look at some that we would like to avoid. Just to kind of get a well-rounded idea of what we should be doing during this market volatility.
I was looking at a couple of stocks earlier today, guys. One, there was this news that the air traffic controllers, a bunch of them called in sick. Maybe they're trying to go get loans, etc. From payday lenders, by the way, a couple of the payday lenders, their stocks have been moving up in recent days. But I was worried because they were cutting, the FAA was stopping all these plane flights on the East Coast, and I wanted to look at the airline stocks, but all three, American, United, and Delta were all up, and they were up before the announcement came that we talked about earlier on the program, that there may be some sort of deal. But I wonder, John, I mean, whether or not, given where gold has been, should investors think about spreading out into gold, spreading into cryptocurrency, or do you think they should just stay sort of in equity and bonds, et cetera?
Well, I'm wary of those things I don't fully understand. I love Warren Buffett's quote, risk is not knowing what you're doing. And so I'm not a gold bug, and I'm not into cryptocurrencies at this point. What I am suggesting is whether it's gold or currencies, any other currency, or commodities, or cash, or bonds, or stocks, what we want is to install, a regulator. And I mean a person who's looking at client assets daily. And the question is, risk on? Do we want to pour more fuel on the fire? Or risk off? Do we want to cool off, put water on that fire because we're in a declining mode? So I want all those assets watched every single day to determine, are we holding or do we need to be lightening up, to at least letting off the gas pedal, because this thing could go awry at any moment, just as we saw 9:20 to 12:24, markets off 20%. That's pretty quick. And for most folks, that caught them completely by surprise. They were ill-prepared.
Great advice from both of you. John Grace and Danielle Shea, thanks to both of you for your time and expertise, particularly on a Friday. We wish you both a good weekend, and thank you again for your expertise.
Thank you.
Pleasure, Bart.